In this video, we're going to talk about ticker symbol NVO. That's going to be Novo on the weekly chart. We're down around 3% on the day, but we're going to do something different in this video. We're actually going to build out our trend lines and supports and resistances here from scratch. So we kind of stripped everything in here. We're just going to keep two moving averages, and we're actually going to show you guys a very, very simplified way of how to identify different supports and resistances and overall trends when you're looking at your charts. We're not going to get too far in the weeds, and we have a big magnet, a very harsh magnet on all our trend lines in here. So it's going to make it very simple for you guys, and we're going to explain what all that means here in a second. But starting out, I always like to have two moving averages here. I always like to start with a simple moving average of a 200-day in here, just because it's a nice long-term moving average. It's very common, and it has a nice it kind of smooths everything out for us here on this overall chart. And it's just a good long term. It seems like it's right in the middle of, you don't want to get too far out, right? Because then you're going to take forever to kind of see the crossovers or whatever. But also you don't get too near term as well, because then all of a sudden everything's going to be crossing over and you're going to get false confirmations and false breakouts and things like that. So 200 seems to be what everybody likes. I also like that as well. And it's not an EMA or anything. It's just a nice simple moving average. Now, as far as our blue line goes here, this is going to be the 9-day EMA. So this is going to be an EMA exponential moving average. So it's going to be front loaded. So it's going to have a lot of weight towards the most recent dates in here. And also it's a nice near term. It's not too far near, right, where you're doing like a three-day EMA or a 2 or 4 or something like that, where you're going to get again those false breakouts and those harsh crossovers. This is far enough out near term, if that makes sense. I know that doesn't really kind of add up, but it's far enough out for us near term that we can get a nice view of how the stock kind of reacted over the past week or so, and then how much weight and how big our ceiling is going to be with that moving average, and also how large the floor is. And when we do get those nice breakouts, you can kind of see us riding it here for a little while. So for example, right here, if you go back to January, you can see a nice little ride that we went up since December. We're holding, and then all of a sudden, boom, crushed right under, and now all of a sudden this thing's holding a lot of weight. It's holding us down. Finally crossed back over here just about a month ago at the beginning of April. So you can see that 9-day EMA is a good EMA for us to kind of watch. And again, I like the weighting and the floor and the ceiling of just having that overall exponential moving average with it kind of front loaded, right? So going forward, what are we looking at here? You can see we're overall in a downtrend ever since 2025, the January in here. So overall, we are trading down. We were near those 100s. Now we're currently down here in these 45s. So overall, that's what we're looking at. Okay, we got an overall downtrend in here, but let's identify a few things in here first. What are we going to be looking at? Well, we're going to try to find all our gaps in here. So there's one right there. Sorry for my circles that are kind of crazy. And then you can see right here. So we got 3 gaps overall. We're going to kind of erase them just so we can clean things up a little bit. And then we're going to go in and we're actually going to draw lines coming from those gaps. So there's one right there. I usually like to take the body of the candle when I am drawing these gaps. I don't really necessarily like the wicks, but you can do whatever you want. And there you go. So all of a sudden, look at that. It's starting to look like a chart already. That's just basing it off of the gaps, right? So here's what we have to fill. We have to come up in here to gap fill right here, 47.42. Here's another gap, 73.77. And then right here, we have another one at 87.17. We're also going to take a look in here. We're going to try to find multiple touch points here for our candles, but we're going to start by kind of looking at low points and high points. So here's a low point right here. We're going to see how many touches we can get in here. So also we have a little bit of a high right here. So we're going to go ahead and hit the body of this, or the body of this lower wick right here in April 25. You can see a nice resistance here in August, but also it kind of cuts out to the bodies of these. So not really sure if we like that too much. We're going to leave that on there just for a second. But also, since we are here, we're going to go ahead and then put a magnet or a trend line right here. It's very, very harsh of a magnet, as you can see, from September. So that's going to be a nice area for us as well to kind of set up shop. We're also going to take a look at some high points in here. You can see coming all the way back here to right around that 81, but really it's kind of this low point back here as well. So we're going to put that right there. You can see it kind of crosses right in there, a little bit of a touch point there at that 81. We're also going to take a look down here. You can see that we have a low coming in right here. That's close enough to that low right there. We're going to go ahead and chalk that up as another touch point for us. And then also right here, you got a couple touch points here off these candles. We're not going to hit this low here, but we're going to come close. And overall, all of a sudden, now it looks like we're starting to have a little bit of a trend in here. It also looks like you have a little bit of something right here, right around this low coming back in August, which is right around that 53.75. And then what do you know, guys? It looks like we're starting to get multiple kind of supports and resistances in here. So kind of you're just matching up where you're getting kind of multiple touch points in here. You don't want to cut through bodies of candles a lot, like right here. So this one wouldn't really hold a lot of weight to us unless you get a nice confirmation here. But overall, we're kind of liking what we're seeing here. So now that we do have that, we're going to go in and try to draw a trend line. So we got to sort of find an anchor point in here. We're just going to go ahead, and I think we're probably going to end up starting right here, and we're going to see what kind of trends we can draw. We have the low point coming in back here. This could be something for us also. You could kind of start gauging it like this, but it looks like these lows have been confirmed in here. So we're going to go ahead and put our lower trend line right there. We're going to start to kind of create an upper trend line here. And this is where it's going to kind of get crazy, because then you have to try to figure out, do you want the high of this candle or do you want the body? It's all about trying to find different touch points in here. It looks like if we come right here on the body of this one, right here, we're going to get a better touch point for us, because we're going to also line up with these lows back here, as you can see, back in November of 24. So all in all, what do you know? Looks like we have an overall trend. We got some different supports and resistances. And the key thing is to know about supports and resistances. We want to see a breach of these and a confirmation, but we do have to keep in the back of our mind that we're looking for that little bit of an overrun, right? So just because our upper trend line right now from what we're trading is 47.42, and that's based off of a gap fill coming from February, that doesn't mean that we're going to go up and touch 47.42 exactly and then we're going to reject it. Well, no, we're probably going to try to climb over it a little bit. We're going to start playing with it here and there. And we're going to kind of overrun it. We might get into those 48s, maybe 49 or 50. And then we're going to come back and then we're going to see if that's confirmed as a support, or we're going to climb back below it. So these aren't actually set in stone 100%. Yes, 47.42, but that just shows you that there is an area of concern, right? So going forward, what would I be looking at here? Overall on this weekly chart is first off, I would be looking at that 47. You can see there's really nothing in here stopping us until we get up here to that 73 mark, that is. And that's kind of matching up with this overall trend line. So that is going to be a huge area of resistance for you that I would be watching, right? So that 53.70 or 75, that is going to be an area that we do need to keep our eye on. Anything outside of that, we're going to be looking up here right around that $58 level. Now, to the downside in here, what are we looking at? Well, we have a trend line right here that we put in, and that's coming from the lows back in November. That's at 43.43. And what do you know? Look at that. It looks like it's getting ready to match up with our overall 9-day EMA. So that's kind of multiple touch points. We also have a moving average right there as well. That's how you know it's a good support, because you have multiple indicators are kind of things pointing to, hey, this is going to be an area that we do need to watch and of concern, right? So this is going to be a big support for us in here if we can hold it. If not, then look out below. There's nothing really stopping us until we get down here, which we had multiple touch points on the weekly here, right around that low of 35.85. Anything outside of there, it's going to be our lower trend line down here, if respected, and that's going to be at 32. So overall, that's kind of how we, it's a simplified version. That's more or less an easy way for you to kind of get going in just kind of starting out to chart and what to look at. And nothing's set in stone. You can move these around, right? Just because I put these here with multiple touch points doesn't mean that these are set in stone. If you want to do the lower wicks on some of these candles, if you want to do the upper, if you don't like where some of these cut through, then that's fine. But this is where we like to kind of start with, and then it kind of dig in from here. So that hopefully that helps you guys overall in how to overall chart. I hope it gives you a good idea of what to look for in NVO as we're going throughout the end of the weekend here. And let's see how we finish off with tomorrow's monthly expirations kicking in. And we're going to see how the overall market reacts, being at all-time highs yet again. So hopefully this video helped you guys. And let's see what happens in here as we continue throughout the trading week in here. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.